All right. What's up, guys? I hope you're doing well. James here from jamesdforsythe.com. And just wanted to talk a bit more about central bank digital currencies. We've been talking a lot about how like the system would work between them, kind of like the banking system is now, um, from that kind of perspective. Also, the actual currency itself, the instrument, I believe is the exact word they use. Talking about how, like, how are we actually going to design this thing, right? And they're all kind of software based in a way, right? In terms of the instrument, right? Is you got to write code, it's programmable currency, right? And then the system is like, okay, how are we, are there going to be like financial intermediaries? Are there going to be like what infrastructure are we either going to build or are we going to actually use what we already have, whether that be from some private sector industry, whether it be like credit card companies, banks, whatever, right? And so I wanted to do a little bit of a twist and think and to start talking a little bit about how, okay, what's the actual physical stuff that we're going to hold? Like, how are we going to use this thing? Um, and there's quite a few things to really that would go into, right? And a couple of ideas. So with that being said, we'll hit straight over to the screen share to the PDF that we've been using in the previous videos. Again, really just talking about the actual like technological considerations for a central bank digital currency in general, right? And so one of the core features that they've deemed that it needs to have, they being essentially the world's central banks, um, talked about some of those that are actually a part of these reports that I was talking about before. I'll scroll up at the end so I don't lose my spot because knowing me, I'll lose it anyway. But anyways, basically the world central banks, the major ones for developing countries, so like the Bank of Japan, Bank of England, the ECB, a committee of the Federal Reserve Board, um, and I think the BIS. I know they're not a central bank, but international banking entities as well. But anyways, basically, this has to be convenient because the currency that they would issue would have to be convenient for people to want to use it anyway, right? Someone's just your regular people aren't going to really use this central bank digital currency if it's in a form that's like difficult for them to use. They're just going to use cash. They don't really care. They're going to use it to pay their bills, buy groceries, whatever. They will pay with whatever's the easiest way for them, whether that's tapping a card or like the debit card you get from your bank or whatever, if you have the tap to pay thing, or maybe it's on your phone. So that's an option, maybe doing something similar to that. Um, a big thing and a big kind of selling point in a way for central bank digital currency is for those that are unbanked. And the whole financial inclusion is kind of a major point they try to push with this. So that being said, how are they going to take care of that and those people who don't have cell phones and don't have banks or like don't have a bank account, right? So like how would they even get that to them? And so there's been some talks, and somewhere in this page on this table about how um, essentially giving someone some physical, whether it be like a thumb drive or something that they could use to do the same thing, right? So for users without smartphones, central banks or customer-facing intermediaries could offer devices. Examples would be stored value cards or more interactive devices with displays designed for point-of-sale terminals, online and device-to-device transactions, right? That kind of stuff, right? Having a dedicated device for that's for the CBDC specifically. So another feature it would have to have is to be secure and resilient. If you're going to have something physical, you have to keep in mind, how are you going to keep either privacy or fraud from happening with this thing, whatever form they seem to want it to take. Um, and so they say typically in a centralized platform, it is the system administrator who enforces privacy policy, while distributed or device based environments with less straightforward governance arrangements can face complications from software based privacy enforcement. Basically, meaning it'd have to be something physical if it's more of a if it's more of a physical thing, like the thumb drive route or some physical device that with a screen that they deal that with, then that would work better for a more decentralized system because you have since the system is decentralized to begin with, so you have multiple intermediaries or agencies or just systems working together to create this in general, to build the infrastructure for it. Then you don't really have, say, like a as opposed to a centralized platform to where you have one entity and they can do all the privacy stuff to where it can be software based, where that's how you're protecting everything. Whereas if it is decentralized, you can't really do that to the same extent, or it would be much more difficult. And so it would be more beneficial just to do the actual um, security part for the central bank digital currency would be on the physical thing that the people are using, right? Whether that be like an encryption thing on their individual phone or on the thumb drive they're given or whatever the case may be, right? It also has to be fast and scalable. And so much like um, card networks are now, like we were talking about credit card agencies like Visa or MasterCard, um, something like that to where it's basically it can handle a lot of transactions very quickly and it's very fluid, right? Very liquid in that kind of sense. So that's really the point. A currency that's kind of more of it has to be like that for the currency itself, right? Because for people that want to use it, there has to be like no problems in operating it whatsoever. And then again, with interoperability, how is this going to work with other systems, whether it be other countries, whether it be you're paying someone who's going through a different intermediary. An example would be like you paying for groceries at say Kroger or whatever, and you bank at your community bank, but Kroger banks at Bank of America or whatever it is. And so kind of the same thing. You both bank with different excuse me entities. So how do you take care of that from this perspective, right? And so they also talk about offline payments as well, kind of having it giving it the ability to be used kind of in lieu of cash. Also just kind of adding that dynamic to it. And so they didn't go too far in depth with offline payments to begin with. Maybe that's in a different report, or I just haven't found a paper they've written about it just yet. But that's pretty much it. And again, like I said at the very end, the sources. This is what the front page looks like. It's the first report, and it's a collaboration for multiple central banks. Like here, you have the Bank of Canada, ECB, Bank of Japan, and so on, right? And the BIS is a part of it. So just kind of putting that out there. It's not like these are small banks or anything that are dealing with this. This is not at all. These are basically the head honchos of the central banks in a way. Um, so yeah. Anyways, that's all I really got for technological considerations. If you guys can think of something else that they didn't discuss in the paper or like I didn't bring up for this specific one, maybe it'd be a different idea of like how they would implement it. It'd be kind of cool. Feel free to like comment it below and everything else. Just kind of provoke a discussion because it's kind of interesting. Like the whole point of this series of reports is for more of a discussion type of thing, right? So that's really the whole point. But anyways, I'm going to leave it there. So I hope you guys have a good night, and I'll see you on the next one.